Hi, my name's Steve Walker from Promise Money. Today I'm going to talk about secured loans. There's quite a lot of information here. I'm going to try and pack it in as quickly as I can. So I want to cover how they can be used, what are the common uses, different types of loans that are available, why they're so flexible, and give you a feel for the important things to consider if you're looking at a secured loan. So firstly, a secured loan, well, what is it? It's a generic term to describe a loan which is secured on a property and sits behind the first mortgage. So a secured loan is also known as a second mortgage. Your first mortgage will be the one that you use to potentially buy the property with, or you might have remortgaged. Your secured loan or second charge loan is one that sits and ranks second in priority behind that. So when you sell the property, first of all, your first mortgage lender is going to say, pay us back. Secondly, your second charge lender or your secured loan lender is going to say pay us back. So that's how it works. It sits behind your first mortgage. Now, you can take out a secured loan secured on your main residence, or a buy-to-let property you own, or a commercial property you own, and the terms that you're going to be offered are going to differ depending on the type of property. The big difference that's worth knowing is that when the loan is secured on your main residence, unless it's just for business purposes, if it's a personal loan secured on your main residence, it's going to be regulated. And what that means is there are much more rules and protection around that loan to protect you, the consumer or the borrower. What it also means is that you're most likely, 99% of the time, going to require to be given advice. And now that's not because somebody particularly wants to give you advice, it's because the regulations require it for your protection. And what that means is that an advisor is going to go through an awful lot of information and is going to do some comparisons so that he can evidence that the loan that you're being offered is suitable. So you're in a highly regulated arena, which is great because you can know with a great deal of certainty that you're being offered something credible, suitable by a properly qualified person. I'm going to come on to that in a little bit more later on. So common uses for a secured loan. Well, it's there for capital raising because you're raising cash to do something with it. And the loan sizes can vary from £10,000 up to a couple of £1 million, depending on the lenders you go to, depending on the type of product that you're looking for. So it's for capital raising. And I'm going to focus mainly today, because this is the most common use of a secured loan or a second charge loan, on personal loans which are secured on the borrower's main residence. Mostly used for things like home improvements, debt consolidation, for business purposes because you need to invest in a business. So those are typical uses. Now, secured loans generally are going to be capital and interest loans. And I'm talking here about the repayment method and the structure of the loan rather than what you use it for or the rates or anything like that. So capital and interest, it is a term loan over a fixed period of time, and at the end of the term, if you've made all your payments on time, then you should have paid the loan off. Capital and interest being paid off simultaneously. There are a few interest-only loans out there, but not many. Now, the advantage of an interest-only loan is that you're only paying interest, you're not paying back the capital, which means that your repayments are lower. The downside to that is when you get to the end of the term, you still owe what you borrowed. So it's not for everybody, and a lot of lenders don't do them. And the other consideration is because not so many lenders offer interest only, you're probably going to get a better rate of interest by going for a capital and interest loan in most cases. Okay, but this is something your advisor is going to tell you about anyway. But there are a couple of products which are new to the market, and you'll find a video on our channel all about this, and we call them a flexible overdraft loan. And the way that they work is that unlike a fixed term loan over a period of time, you borrow £100,000 over 20 years and you pay so much per month. These work a little bit like an overdraft, so you have a facility for, say, £100,000, and during the first few years of that loan, you can flex the amount up and down. So you might have a facility for £100,000, but you're only using £25,000 of that facility, and then you don't need it any longer. You might have used it to invest in your business or to buy a buy-to-let property or something like that. You pay it back, and you only pay interest on the amount that you've drawn at any one time. So with that £100,000 facility, if you're, let's say, a buy-to-let landlord, you're looking to go and buy properties, do them up, and then flip them onto a buy-to-let mortgage or sell them, that overdraft is great because you can go piling in there, buy it quickly, you know you've got the overdraft in place, so you haven't got to wait. It's cheaper than taking out a bridging loan, so use it as your deposit or for your refurbishment money, and then you pay it back down again. So that's an interesting product. Look out for the video on that. So let me tell you a few features now about secured loans. Rates typically start around about 3.5% and go all the way up to typically 8, 9, 10%. And when we're talking 8, 9, 10%, those are going to be for the much more challenging applications. There are some lenders which charge more. They're particularly challenging applications. But yeah, I would say the average is probably 4, 5, 6%, something like that. But the important thing to understand about secured loans is that the underwriting criteria is different to mortgages, which is why people often will go for a secured loan because they can't get a remortgage. Okay, you're looking to capital raise. Some brokers only do remortgages and they overlook secured loans. But if you look at a secured loan, a lot of the lenders don't credit score, which gives you more options, especially when you compare it to an unsecured loan. There are lenders that will go up to 100% loan to value. Some of them will go beyond. There are lenders that can help you with poor credit. You'll find a video on that as well on our YouTube channel on the website. So if you've got bad credit, there are lenders that specialise in that. But the important thing also about bad credit is that many of the second charge secured loan lenders, they'll ignore credit problems that you might have had, like defaults and CCJs or missed payments, which are over 12 months. Some ignore over 2 years, but some ignore them over 12 months. So if your credit is good now, but you've had a problem recently, a secured loan could be a good fit for you. Affordability, they have different criteria, which is a little bit more relaxed in many cases than a mortgage. They're particularly good for self-employed contractors and that sort of thing. Property construction, a little bit more flexibility around that, and especially the use of the money. Most mortgage lenders, they just like your remortgage or your mortgage to be used for your property, for your home improvements and things like that. But secured loans, if you need to raise it for business purposes and things like that, a lot more options there as well. So that's really good. Now, when you apply for a secured loan, you're going to be having probably a number of things going through your head. Should I be looking for a remortgage? Should I be considering a secured loan? Should I be looking at an unsecured loan? So let's just talk about the pros and cons. I've mentioned that when you compare a remortgage to a secured loan, you're going to have different underwriting criteria. But the other really important reason why you might want to have a secured loan rather than a remortgage is because you could be tied into your mortgage with early repayment charges. And it makes more sense to have a secured loan and then remortgage the whole lot at a later date. Or your circumstances might be such that you've got a really good rate at the moment, and if you change your mortgage, that rate's going to go up. So if we had a scenario where you've got a £200,000 mortgage and you want another £50,000, you don't really want to increase the rate on that whole £200,000 to get that extra 50. It might be better to say, you know what, we'll keep that really good rate we've got and we'll just pay a slightly higher rate on the £50,000. And scenarios where that occurs could be you're on a tracker rate and you don't want to lose it. It could be that you've got a little bit of adverse credit and maybe a mortgage company might do it for you, but they take the whole lot up to a higher rate. No, keep the low rate and just pay the higher rate on the secured loan. It could be you're self-employed or a new business. There's lots of reasons why a secured loan makes sense. When you're looking at secured and unsecured loans, the big obvious difference is a secured loan is secured on your property, an unsecured loan isn't. And that means with a secured loan, your home is at risk. There's no getting around that. If you don't make the repayments, your home is at risk. An unsecured loan, it isn't. But with unsecured loans, the term tends to be shorter, so they can be more expensive. And you can't borrow as much normally. And the other big one is that unsecured loans is very much down to your credit score. A computer's making the decision. With a secured loan, some lenders do credit score, but most of the time, there's a human being at the other end of the line and they are looking at the manual criteria. So the acceptance rate on a secured loan, they'll simply accept scenarios that an unsecured lender wouldn't. Now, let's talk about advice for a second. I mentioned it earlier on. It's really, really important when you're having a secured loan that you get advice. If you jump online and say, I'm going to look at a secured loan and go to a comparison site, the chances are that those comparison sites are going to put you in touch with a loan specialist who just does loans. Okay, now first of all, the comparison site has got to be paid for that lead, so that's going to be factored into how much the fees are and the costs are of the secured loan that's going to be charged by this specialist. But the other important factor is that specialist might not do mortgages, and it's really important that if you're thinking of a secured loan, you talk to a broker who is a specialist in both second charge and mortgages. And when I say specialist, I mean they do both, they do them in-house, they have direct agencies with the lenders. Okay, they are packages of both. Now that's not too easy for you to know, but I would say that 95% of mortgage brokers probably have got direct agencies when it comes to arranging mortgages, but go through a specialist, a bit like us really. They come through a specialist like us when it comes to arranging a secured loan. They don't have the in-house expertise. Now they're great to go to as long as they do consider secured loans, whole of market secured loans and mortgages, but just be aware of that. Some of the specialist loan houses, they're only going to look at a loan, and the downside to that is you could be shoehorned into their best loan when actually a remortgage would have been suitable. You want advice from somebody who's going to consider the whole market. Okay. Now the other big thing about secured loans, and I touched on it a second ago, is affordability is really important. Your future plans is really important, and advice is really important, because your home is at risk. Your home is at risk if you secure a loan, just like it is with your mortgage. So that's a real whistle-stop tour. You're going to find lots of videos on both on our website and on our YouTube channel, which will tell you more about debt consolidation, if you've got poor credit, if you're self-employed, etc, etc. So you'll find those videos there as well. The key thing to remember is if you're thinking of applying for a secured loan, make sure you apply to somebody who can give you advice on both first and seconds. Comparison sites, I'm not convinced. So I hope that's useful. Please subscribe to our YouTube channel. Please share the video. Please like our videos, because we want more people to see them, and the only way they get to see them is if other people share them, subscribe and like them. That's it from me on secured loans. Please get in touch with Promise Money if we can be of any help to you. Thanks a lot. Goodbye.